Hi everybody, hope you're doing well. Today we're going to cover this week in QQQ, or essentially the NASDAQ 100, for the week of June 21st, 2021. For the sake of brevity, we're just going to call it the Qs. Let's just jump into it. So let's talk about what's happened this week. So our predictions this week was it's going to be a small bull, ending out essentially a 4-week bull cycle that we had predicted 4 weeks ago. And honestly, it ended up with a small bull. At the time of this recording, it was up 0.7% for the week, or roughly 9.3% for the year to date. So small bull. This ends a 4-week cycle where it's up about 4.5%. So a nice little bull run for the last 4 weeks. Our year-to-date projections in terms of growth, we expect 45% growth this year. It's up 6% week over week. And this is corporate growth. This is looking at everybody that makes up the NASDAQ 100 and the QQQs in terms of how they're growing for the year. This is a good sign for continued growth. And so it should still continue to have a bull for the year in entirety. Obviously, there's fluctuations and pullbacks. That's a natural part of just the trading cycles. But again, on a very good trajectory to have growth for this year. The analysts, they're projecting it to be up 33% for the year to date. That's actually flat from last week, so they really didn't make any adjustments. But if we look at what's happening for the last couple of weeks or the last year to date, you can see a lot of peaks and valleys at the bottom in terms of the stock delta from our predicted stock price. So we're still pretty far away from where we think the stock price should be, about 10%. So room to grow for the year. Long term for the year. So next, just some housekeeping. Prep to Grow is going through a seed round. We're a big data AA platform that singles purpose is really to improve and simplify the investing process. So the buying, the selling, the recommendations of equities such as stocks and options, and coming real estate and cryptocurrencies. And so we're just started off over the last 12 months. We're about $500,000 ARR annual revenue to date with about 8,000 subscribers. So if you're interested in getting in and helping be a part of Prep to Grow and being a part investor and owner, we'd love for you to consider that. But let's jump into what's happening next week. So we're starting what the algorithms are telling us is a bear or a pullback that's going to be going on for the first 3 weeks. We saw a little bit of today when the Fed had some not so positive things to talk about the market. We saw inflation rates, all those things starting to bubble up to the top, and is going to start a 3-week bear cycle. Prep to Grow predicted this about a month ago that this cycle would occur, until now we're entering in this cycle, and we'll get to that in the next slide about what's coming and how long it'll last. But the reasoning, we have a good reasoning, but the rest of it kind of mitigates it or eliminates it, really. QQQ growth has continued to accelerate week over week. They're growing. They're not slowing down. They should end this year very positively. But short term, there's a lot of bear signals. Inflation's causing an issue. We're at a 52-week high for the Qs in terms of stock price. So it's at a very all-time high. And stimulus is ending. And I think this combination of things is going to start to really cause some unsettling in the market and have people start to take some profit out and put some caution into their investing. We've seen these signals again 4 weeks ago. What you're seeing in this pie chart is what we predicted 4 weeks ago, is that there's starting to be a shift from a bull cycle to a bear cycle. More signals. You'll see probably next week volumes start to tick up around more buying of bear. But let's talk about these cycles that we see. So May, we had a bear, and that occurred. It pulled back. We predict this 30 days out. So in April, we predicted there'd be a May bear. In May, we predicted there'd be a June bear. You can see these in the peaks of the green. Green means bear. Green means bull. Orange means bear. And this graph looks like we didn't have the legend for this week, but we'll correct that for next week. But when we look at what we're predicting in June, is that now, with July coming upon us, there's a start to a bear. So if we look at the signal 44, hockey sticking up to a 114, this is start the bear. It'll start this week and will really accelerate next week. So if you're looking to do some puts on the Qs and take some short-term profit, maybe a recommendation for you. Everything we talk about on this channel and for Prep to Grow in general is all driven from our AI and big data platform. It's recommendations. We're not financial advisors, but our data is highly accurate. Next week, we'll actually put a little bit of a scoreboard about weeks we got it right versus weeks we didn't get it right, and around earnings announcements, and talking about weeks we got earnings right and weeks we didn't in terms of the companies that we post. If you want to see our earnings and everything related to this, or slides or videos or other content, just go to prep2grow.com/QQQ. But again, for this slide, entering in at least what we're seeing now is a 3-week bear cycle. So get ready for that. We sold all of our Qs today in terms of calls and stocks, and so we fully exited this morning. So let's talk about upcoming earnings. Very slow and boring, to be honest, for the week of June 21st. Accenture, FedEx are not Qs. They're not NASDAQ-100, but they are announcing next week, and they've also had some unusual option activity, so we're going to talk about that. Last week, Adobe, Oracle, and Jabil. Adobe did exactly what we thought it was going to do. Again, it's on prep2grow.com/QQQ to see that. They crushed earnings. We predicted they're going to crush earnings. Their stock was up 2 to 3% overnight. Oracle, talked about how Oracle would miss expectations and would have a pullback. Expectations being long-term and trying to recover out of that. And they missed in terms of how they were going to be received by the market. They had a good quarter, to be honest, but there's so much pressure on Oracle that they've lost a lot of what they were in the past, 5 years ago or 10 years ago. And their long-term projections are not what they should be. Cloud spending, ERP software, everything for them is projected to be down, frankly, because they're getting their butts kicked in the market. So let's talk about next week, Accenture, FedEx. Let's jump into Prep to Grow, and we'll show you the pricing and the technicals behind these two. For those of you that are subscribers, this should be pretty straightforward for you. For you that are new or aren't part of our active trader, if you want to see recommendations for upcoming earnings announcements, you just jump into the filter. Say you want to see by sector, like the QQQ, Jets, SPY, whatever you want to look at, and then you just say, hey, show me any earnings that are coming up the next week. You can save this and have it as a screen. Alerts will be sent to you every single day with companies that match your criteria. And then just hit apply if you want to do it real time, and you'll see everybody that's announcing over the next couple of weeks. Micron, Bed Bath & Beyond, a few others are announcing. Micron and Bed Bath & Beyond, I believe they're both part of the Q, so we'll talk about them in the coming week to 2 weeks. So let's talk about two different things. So we're going to talk about Accenture, who's announcing next week, and we're going to talk about unusual option activity. I know we said we're going to talk about FedEx, but there's not enough going on with FedEx to make it worth anybody's while to cover it, so we're going to save some time on that. So let's jump into Accenture. We've been tracking Accenture since 2020, the beginning of 2020. We haven't made a lot of recommendations on Accenture, but whenever we have made a recommendation on Accenture, we've gotten it right. This isn't really public to our subscribers because we would like to see at least 30 predictions for our companies before we provide them to our subscribers. But 4 for 4 out of 5-day and 30-day, 2 different recommendations are pretty good. So they're announcing their Q3. If you don't know who Accenture is, they're one of the world's largest professional services companies, project management, technical, I think they do accounting even. They're a pretty good company. They're based in Dublin, Ireland. They're there for tax reasons. They're a pretty solid company. I personally like PwC more. I know more people there. They're much, they're just nicer, friendlier, just more willing to work with you. It's not an endorsement for Accenture, for PwC or Accenture. It's my experience, and I've worked way more with PwC over my years. Accenture, They're announcing on June 24th, next week. We're predicting that there's going to be about a 5% increase in stock price. This is an option. So some interesting things around this. This 0.41 volume and open interest today. Yesterday, this same option was greater than 1. If there's a volume to open interest greater than 1, that means there's a lot of trading activity happening on it. It's kind of unusual. Again, we have a very high success rate on this, although not a lot of recommendations that we predicted, but every time we have, it's been accurate. We wouldn't buy this just because we haven't predicted this enough. For this one, the option activity that's had the most unusual option activity is this one. It's an option contract for July 16th at the 290 strike price. It's relatively cheap. It's about $4.15 per contract, so a little bit interesting. If we look at their pricing over the last 200 days and 52-week high, they've really hovered around the 280 mark, and their 52-week high is at 294. Based on what we're seeing, they've been growing throughout the year, but had a massive pullback, as most companies did last year. They've been recovering out of that. In their Q3, they had a hockey stick in terms of growth. So theoretically, they should have just a good growth in Q3. Obviously, the big concern with a professional services company is that they're supposed to be on site for companies, do a lot of traveling and engagements and those sorts of things. They did readjust some earnings, and so did the analysts based upon this. So we believe that they'll hit their expectations, or their algorithms are predicting that they're going to hit their expectations. There's a pretty high confidence on that. Just the challenge is there's not a lot of growth. There'll be probably a 5% growth, as this was the prediction for 5.2. So it fits just barely a profit gain that Prep to Grow would get into. They're down for the day, just like everybody else, 1%. But we think Accenture should have the algorithm the same. They should hit their quarter. They should have a good Q3. They're not going to crush it like Adobe, but should just make it. Let's look at the other two. These other two that we're going to talk about, Marvell and Microchip, are announcing, I think soon, but these two had some insane, unusual option activity yesterday or the 17th. And so that's what we're going to talk about it today. As part of the Qs every week, we're going to talk about one or two companies that have just a ton of unusual option activity. So let's talk about Microchip. We're pretty accurate on this. We didn't recommend them just because there's not a lot of gain. And so we predict if there's enough gain for an option, recommend it. Typically, we have a 15% gain threshold, and they just didn't cross it. So this was a call. They're not announcing till August. But yesterday, for Microchip, they essentially, if you look at the option volume here, 780 to 805, that was today. Which is pretty high. Yesterday, Microchip, the same one, was at open interest rate of 77, and the volume in terms of purchases was 780. And so 10x what the normal was for this call was. So people are expecting that this is going to go up. This is an expiration for Jan 21st, 2022 at the 170 strike price. So somebody's made a pretty big bet that Microchip is going to essentially crush the next two earnings, and we wouldn't disagree. We're expecting that they're going to go up as well. Obviously, they had to pull back today because of the Fed. So Microchip, a lot of unusual option activity. It doesn't show for today of the 618, but yesterday at 617, volume open interest rate was 10.1, so very, very high. So Marvell, so we talked about them as an earnings announcement, I believe 2 weeks ago. Like them, Marvell's great, just like Micron. Marvell had a good quarter, like we predicted. We're now predicting they're going to pull back. It's a pretty good success rate for them. So it's a good sign that this may be true, or prediction and correlation that may be true. They're not announcing earnings for a while, 825, so a couple of months away. But somebody yesterday, not a lot of open volume to open interest today, so somebody bought a ton yesterday. For Marvell yesterday, their volume to open interest rate, open interest was 14.1. So it was 1,526 volume, 200 open interest rate. So somebody just went and bought 2 tons of Marvell, and it's not very cheap. It's 525. So somebody's is making a big bet that Marvell will decline in the next month or two. The option expiration for this is November 19th at the 55 strike price. If we look at the technicals, yeah, I mean, they're pretty high, 52-week high. We talked about Marvell 2 weeks ago for the earnings. They're crushing it. This may be just a pullback because we are going into a bear cycle. So I wouldn't disagree that this is probably a little bit high and it's going to pull back a bit. But somebody's making a pretty big bet on that. So just to summarize again, Accenture should have a good quarter. Microchip is a call. A lot of unusual option activity on this. It is the 1/21/2022 expiration date. And then Marvell, there's a lot on the put. Our algos are pretty good at the predictions for this, really good for Microchip. But this is unusual option activity for 11/19/2021. Again, yesterday this was 14. Unusual option activity to open volume was 14.8, and Microchip was 10.1. So that's very high unusual option activity for both of these at these options. Let's jump back into the rest of the week. So just to summarize, next 3 weeks are going to a bear. We predicting it's going to pull back. Next week should be the start of it. I think today really was the start of it. The Fed said something that set off the market. I'm not 100% sure what it was, but it was definitely some concern. We'll have to read about it and see if the algorithms picked up and adjusted for it. But 3 week bear cycle, maybe longer depending on what happens this week. But get ready for it. Prep to Grow as a company sold off all their Q holdings, stocks and calls. Again, Prep to Grow is not a financial advisor. We're not a financial institution. We have an AI big data platform that analyzes millions and millions of data points every single day, and we predict performance for companies, and that company performance naturally translate into their stock performance. If you have questions on this, always free to contact us at contact@prep2grow. If not, hope you have a fantastic week of trading, and be prepared. Qs are looking like they're going to pull back. Take care and happy trading.